Hello everybody, it's me here, How To Cameron, and warm welcome to today's video. Today we'll be looking at the worst investor you've never heard of, Ozbourne Foreman. This is a guy who's from England. He is a finance creator, business consultant. Okay, who would have thought? But this is a guy that is just an awful investor. Now, if you didn't know, I love investing. I'm literally obsessed with it. I've been obsessed with it for the past year or so, and I'm doing pretty well, to be honest. Not that I like to boast about it, because it's one of those things that can so quickly change. And being obsessed with investing, I am very aware of the investing side of YouTube. I see a lot of videos talking about investing, and a lot of these videos are utter shit. They are honestly awful. Now, looking at his channel, like straight off the bat, it looks pretty good. Like, you actually just scroll down and you look at his videos. A lot of his videos are just videos you would expect a normal investment YouTuber to make. Before this video starts, if you guys do enjoy it, be sure to smash the like button, subscribe to the channel if you're new today. This is going to make me sound like an absolute nerd, but freetrade is an awful platform to use because you just have to pay for it. Like, you just have to pay for freetrade. I'll show you guys how much you have to pay for it. I don't think it's very much. Yeah, it's $5.99 a month. The reason why you pay $5.99 a month is because you'd want your stocks and share ISA. Pretty much, if you are an independent individual investor in the UK, you can get up to 20 grand a year deposited into an ISA, and then you don't pay capital gains tax, and you don't pay tax on dividends as long as the money's been deposited into the ISA, which you've then used to buy the stock. It would be stupid to have a general investment account, which is the only account type you can have with freetrade, because you're missing out on that tax saving. The only reason why you'd have a general investment account is if you already had passed the threshold of 20 grand a year, but you'd have to have done that on a different platform anyway. So you would have to pay £6 a month, which is stupid because trading 2-on-2 is exactly the same, but you can do that for free. So the fact that he's using freetrade straight away signifies that this guy doesn't know what he's talking about, okay?
In this video, I'm going to show you my freetrade dividend growth passive income
What is this
portfolio.
keyboard setup? What is this keyboard setup? What is this keyboard? Looks like an elephant's ear. Got him.
This is to give an example of how a working dividend portfolio works, so that the newer investors out there can learn from it and perhaps not copy the end result, but like learn from the process I have given. I know that when I...
Pro's commentary sucks ass. So he's explaining why dividend growth, and you know what I will say about this guy, like he's genuinely suited up, like he knows what he's talking about. Okay, that's not the problem though. It's not necessarily what he says in his videos. It's just what he practices that makes him an idiot. Okay, and you guys will see what I mean, and trust me, it is a massive bomb. When you see what this guy's invested in, oh.
It's a lot more cost effective to go for free trade. In the first year, I've got it calculated that it should be less than 1% in fees. However, as the years go on, it will become much less. And so whilst yes, I would actually benefit from having a portfolio in another broker with like a fixed percentage fee, in the long run, it's going to perform better for me.
So what Ozbourne Foreman's saying here is because free trade is $5.99 a month, it will make up 1% of his portfolio in terms of fees because it's quite a small portfolio. But what he's saying is that percentage will go down as his portfolio grows. What you find is with different brokerages, sometimes they charge based on the percentage of your portfolio, but that is absolutely dinosaur. Like, I'm pretty sure he's just not done his research because trading 2-on-2 is better in every single way and it's free. So his investments here are fine. Hang on, that can't be all of them. Surely not. It said 1 grand.
Currently, I only have these other companies in my portfolio, lead deposits, and
Wait, he has 81% of his money in cash. Pro's using freetrade as a bank account.
I wanted to do that myself with more control. Also, the compounding of the dividend timings is a lot better because I will get paid them after the dividend payment date has been reached, rather than waiting once or twice a year for the fund to pay me. Also, I believe that I can select stocks better than an index fund, as the index fund tracks the market, but I believe that I can pick the stocks that will grow further than the market and outperform it in the long run.
So Ozbourne Foreman is amping himself up here a little bit. I believe I can beat the market. Trust me, the punchline of this video, trust me guys, it's hilarious. Okay. He has 6 grand in Boohoo. 6 grand in Boohoo. And his portfolio in Boohoo was £2.90. Fucking hell. When you see Boohoo's price now, you're going to lose your shit. Where's his portfolio?
Luckily.
Where's his like outlook of his portfolio? So he's got half of his portfolio is in Boohoo. So he has a portfolio of about 11 grand, and 5 grand of that is in, sorry, 6 grand of that is in Boohoo. Like, why? Like, I don't get it. I just don't get how he has that much money. Like, the rule number 1 of investing is you don't put all your eggs in one basket. Like, that's literally the number 1 rule of investing. And this is someone who is making video after video after video, talking about investing, talking about the market, the economic climate. And bro doesn't know rule number 1. Bro's lost at the first hurdle. Bro's suspended on trading 212. What went wrong?
They had stated that after a review, my referrals were not sustainable, and that I had personally abused their system. This is because users were signing up with my referral link, they were going on the platform, they were getting their free share, and then they just weren't using the platform, they were getting the free share, probably withdrawing it. Which, I don't really know how I'm at fault for that really, because it's a bit out of my control.
So, let's get this straight. The reason why Ozbourne Foreman was suspended by trading 212 is because of his referral system. Like, the referral system is not like a divine right. Like, if you have a company that has an offer going on that you can refer people, that's not a divine right. Okay, it's a privilege to have, right? If you refer people, you know, it's a nice thing, it's an extra bonus to get in the bank. If they feel like you have people that you're referring that they're not making a profit off, they're of course going to withdraw it. And it's all well and good saying, oh, how dare, well, they can't do that. I don't get how that's my fault. It's just, it's a nice thing. It's something that they're trying to do to entice you to refer people. If they're not happy with what your referrals are providing, they're not going to continue it. Like, that's what a smart company would do. You know, Trading 212 is a very good platform. Like, it's industry leading in many different departments. Why would it make such a big loss on something that's just doing out of being nice? Like, it's literally just trying to be nice. It's trying to encourage people to join the platform. Why? I don't get why he expects it just to keep paying out. Like, I hate people who do this. I used to watch a lot of videos on like people's Trading 212 portfolios, and it would always frustrate me because you'd have people trying to showcase, you know, what it's like to be a normal investor. But then what they would have is they would have lots of different random lump sums in random companies, because the offer that they have is if you refer someone, they get a free share, and so does the person who initially gave off that code. So what happens is if you have a YouTube account and you are obviously making videos on Trading 212, you can just refer people. But the problem is those referrals are artificially amplifying your portfolio. So for me, I just think it's really scummy, because if you're trying to demonstrate what it's like for a normal person to invest, but in actuality, if all the money or a good portion of the money that's on the portfolio is coming from referrals, it's not realistic. It's just misleading, really. So it's just disappointing to see. And I get why they do it, because it makes a good amount of money, but it's a cycle. Like, Trading 212 have to benefit from it. If they don't benefit from it, they're not going to continue doing it, because it's just costing the business, which is obviously, it should be within your interest for Trading 212 to do well, saying you are a customer of theirs. Like, they're literally holding your investments for you.
It's a bit out of my control, and surely if users are leaving the platform after a referral, it's not through fault of my recommendation, but rather through fault of an application or their platform that's clearly not keeping users enticed.
It's not. I don't get why this guy's so entitled. Like, he's just acting so fucking entitled. I just don't get it. Like, you've made money off the referral system. They're not taking money off you. They're just saying that we don't think it's renewable to continue the offer with your account, because the people you're bringing in are not using the app how they want to. You know, if you have people registering, you're using your code, and they're just withdrawing the money, like, of course Trading 212 are not going to want to attract that market, so they're going to withdraw your right to make profit off of that system. That's not, like, I don't know why he's acting so entitled. They're not just going to give you money, okay, for nothing. You know, like, you're not doing anything of value, and that's it. Like, it's just so entitled. And I get, oh yeah, Cameron, you're just defending a company. Bro, it's a good company. They're industry leading. Honestly, they're industry leading.
Trading 212 had also gone to the additional length of stating that they could take back my proceeds or the money that I've made through free share referrals.
Okay, hang on a minute. I didn't realise he said that. That is a little bit scummy. Okay, fair enough. I get why you're frustrated.
Which sounds a bit like a threat. I had actually gone to the length of responding, and it had taken me well over an hour. I had been suggesting...
Bro, you didn't need to do that, though. Bro's blaming Trading 212. Trading 212 took an hour off my life. Bro, you didn't need to reply to them. They aren't going to take back the money, okay? They're never going to do that. They're just saying that as a... They are saying it as a threat, almost. In the case that maybe you try to evade their like, suspension of your referral program. Like, that's probably why they're saying it. Because they said, oh, they reserve the right to. It doesn't mean we are exercising the right to take your money.
When I did refer people to the platform, it was value orientated. This had meant that when I would like people to use my referral link, I was saying you could get a free share when you deposit money, which obviously users would be going on seeking value. Whereas if I'd have changed that to perhaps for people saying that I personally recommended Trading 212, and if you'd like to sign up to it, use the link description down below, then I feel that may have given them more value on the people that sign up and less people would be abusing the system. So I'd suggested about that. I'd also suggested that perhaps they could change the way they offer value through their refer a friend scheme.
He's acting like he's the big man when it comes to the marketing, but really they just don't care about him. Like, and I love how he says another possible solution could be a review of the free shares going forward. And then he's mentioning upping the deposit requirement for the free share, or possibly adapting the algorithm that calculates which free share is given out, as I've not had any shares with a value less than £5. So bro is literally messaging Trading 212 saying, you've suspended me from the referral system. Well, guys, this is what you should be doing instead, even though he's just a random nobody. Like, it's just so sad. I am Ozbourne Foreman, a content creator on YouTube with a community of around 3,500 subscribers. I think this video is an important example to mention, as I can review my marketing strategy that may favour less referrals but higher quality clients. I don't get why bro's so bothered about this. I mean, you shouldn't be relying on a referral program to make money, like, especially when you're making videos on investing. Shouldn't you be making money through investing? Like, I don't get it.
But they seem to have dismissed it and not read it. This had led to me being permanently suspended from making free share referrals. This means that whilst I had a link...
Therefore, we consider that the promotion has been misused, and due to this, we would suspend your unlimited referral link moving forward. I mean, it is a bit shit for him. I get why he's not happy with it, but he just needs to swallow it. Like, I don't get why he's trying to fight you so much and why he's coming across as so entitled. Like, at the end of the day, you're irrelevant, and, you know, you're literally referring people to the platform. They're not benefiting from your referrals, and because of that, they're just like, well, we're not going to do it anymore because we want to keep our platform afloat, which I think is fair enough. Like, I don't get why he's hating on Trading 212. I don't get why he's trying to give him bad press for it.
My older videos that are still recommending it and obviously getting people to sign up are still going to be earning value. So it's a bit unfair that they could just say, you know what, we're just going to cut this off and that's that. But life is unfair, and I'll just deal with that. That's not my concern. My concern is that...
Bro, you can't say that's not your concern after you've literally concerned it. Okay? I'm not gonna lie, I'm probably nitpicking, and I get that I come across that way, but this guy just pisses me off. I don't even care, bro, okay? So that's why he's on free trade. I've just realised. Bro's just on free trade because I guess they allow referrals? Yeah, they do. So you can actually... Yeah, you can get your free share. And, I don't know. That's kind of scummy, though, because free trade is a worse platform. Like, as I mentioned before, if you want an ISA investing app, you have to pay $5.99 a month. And if you don't have that, you get a general investing account. You're literally going to be paying taxes that you do not need to pay. You only have to pay these taxes if you're depositing on over 20 grand a year. And at that point, you still only have to pay taxes on the money that you deposit above 20 grand. So you're missing out on a huge tax saving. And the only way you can get around that is by paying £6 a month. So it is scummy. Like, I remember when I first invested, I didn't know about ISAs. I didn't even know, but luckily with Trading 212, I found the ISA section and it was free to do. So it wasn't too hard for me to get around it. But I think that's scummy. Advertising a platform that is objectively worse just because you can get referrals off it. I just think that's scummy.
Free trade also doesn't require you to have high amounts of capital. I know that when I wanted to open a Vanguard account, they required me, at least for a SIP, which is a self-invested personal pension, they required me to have £500 before opening the account. Whereas free trade in this regard, the minimum amount you could deposit is £1. You could really get started from as little as that. Although you can't sell any of your investments if they have less than £2 of equity, I still think this is a very fair price and allows you to get started with less money.
It's exactly the same for Trading 212, but bro's not comparing it to Trading 212. I wonder if he actually mentions Trading 212 in this video.
This FX fee is higher than their competitor, which is Trading 212, which I believe is only 0.15%, although that figure is off the top of my head and I've not double checked it. Free trade.
So the only time he mentions Trading 212 is the FX fee.
Today's the day I made 200,000.
So I'm just confused by this. Like, the FX fee, for people who might not know, the FX fee is what fee you pay if you're buying a stock in a different currency to the one you have. If you're paying for US stocks, you'll be paying the FX fee. I didn't even realise it was a better rate than free trade. I'm actually surprised he mentioned that.
Rather than making money via CFDs with the likes of Trading 212. I'm more than happy to continue supporting this business, and if that means paying a monthly fee, then I'm happy to do so.
I just don't get, I don't get it. He only mentions, the only thing he's mentioned about Trading 212 is that the FX fees are lower on Trading 212, which isn't really a massive thing. I mean, it is a massive deal. I mean, the difference between 0.15 and 0.5, I think it might be for free trade, something like that, is huge if you're investing thousands of pounds. He's mentioned that part, but he hasn't mentioned the monthly fee. He hasn't mentioned that Trading 212 is actually free. So it's like the biggest part, and he's not even mentioned it. He made this video, I hate diversification. Here's why. Bro, that is the stupidest thing you could, what do you mean you hate diversification, okay? Here's the thing with me, I hate index funds, okay? Not all index funds, I actually like most index funds to be fair, but the index funds that just go by market weight, so for example the S&P 500, the FTSE 100, I don't like those index funds because they are literally just the biggest companies. I don't believe that just because a company's big it's going to do well in the future. I just don't believe that's the case, and that's why I don't believe in those index funds. But that's me saying, oh, I don't like index funds. That's a crazy thing to say, but it has truth to it. Saying you hate diversification is like saying you hate breathing. It doesn't make sense. You're diversified. Even if you're invested in one company, you're diversified because that company in itself will diversify. It's just such a stupid thing to say.
Ozbourne Foreman, and welcome back to the channel. Today we're going to be talking about why I hate diversification and consequently why I hold only a handful of stocks in my portfolio. And if you like the video, please drop one of these to beat that YouTube algorithm. Firstly, let's talk about my investment strategy. I try to invest in high quality stocks that have strong underlying financial growth and fantastic balance sheets that have very limited debt or good strategic use of their debt and high levels of cash.
You see, this is such an idiotic way to invest. All the financials of a business, all the quantified financial aspects to a business, it's all baked into the price. It's all baked into the price. So if you have a company that has really good financials, British American Tobacco is a golden example of that. If you look at the financials of British American Tobacco, you will come everywhere. Okay, they're phenomenal. They are absolutely phenomenal. The problem is it's baked into the price. So that price is inflated massively. So if all of a sudden the financials start to go down and they go from being sublime to just good, the price of the stock will flatten. It will go right down. that isn't a good way to invest. Like investing, a lot of the time, the best time to invest is when a company is either undervalued in the sense that maybe the financials are pretty dismal, but it has such a good like brand image. It's got such a good longevity in the business. Like one of my favorite stocks is Disney. Disney is such a monumental company. It's a massive company. They have so much power in the industry they're in. Okay, when you look at their theme parks, the amount of investment they have in terms of, you know, people's vested interest in them. Like people go to Disneyland every year, you know, even if they don't watch the Disney films anymore. They just go there out of nostalgia. Like these things are things that can't be quantified, but they're things that prove that long term the company will do well. People love Disney. Same with Coca-Cola. So the financials look bad like they do for Disney right now. I think they'll bounce back, and I think right now it's a good opportunity to buy Disney. Okay, lots of rambling, I know. Another good time to invest is when there isn't the money to invest. Okay, so what I mean by that is a lot of the time when companies go down in value, it's because more people are wanting to sell the stock than buy the stock. That's one of the main reasons why the share price will come down. It's why in a recession, stocks decline. It's because there's a lot less cash in the market. People have a lot less money. People can't invest as much when, you know, there's a higher unemployment rate. You know, if interest rates are really high like they are now, people are wanting to save up their money rather than spend it on things like stocks. So these are things that take money out of the investment pool, and it means that more people are trying to sell stocks than buy stocks, and that brings the price down. So you're looking for companies that are undervalued, not just have great financials, because that's already baked into the price. And you're also looking for companies which are maybe in a market which are pretty cash poor. Investment pools where there just isn't that many people looking to invest in that moment because people just don't have the money to or the confidence to.
This means that a diversified portfolio with my low level of wealth means that I'm not going to get very strong returns. In fact, it wouldn't be beneficial for myself to diversify. And this means because I've got a low income that multiple diversified positions will only drag the average annual returns downwards and more in line with the markets.
That's not true at all. What he is saying is, let's say you were big on banks, right? You wanted to invest in banks. If you invested in all the top banks, HSBC, NatWest, RBS, Barclays, JP Morgan, if you invested in all of them, your returns would probably come down because what you'd find is they obviously all compete for market share on lots of different products, whether it be bank accounts, credit cards, mortgages, whatever it may be, because they all compete with each other. You'll take a massive W on one stock, but then you'll take a massive loss on another because it's to the detriment of one another. However, if you are investing in lots of different industries, that's exactly what won't happen because they're not related. The companies should be different. They should operate in different countries, in different places. They should have a different market. That's the whole point of diversification. I'm losing my temper now. Looking at it here, you know, he has $8,000 in Boohoo, which Boohoo right now, spoiler alert, is in the bin. Okay, Boohoo is absolutely in the bin. He's got 7.7 grand in Games Workshop. They've done pretty well, but again, it's such a weird industry, like Games Workshop. Like, it's not a big industry. They're not in a massive industry. This is indie games. Games Workshop is like indie games. Yeah, Warhammer. That's not really an indie game, but it's still gaming. Ashted. Never heard of Ashted. Group. A rental company. A British industrial equipment rental company. I just don't get why this guy, his portfolio just doesn't make any sense. He just has lots of money in really niche sectors. But then Ashted, though, are in a massive sector, yet he only has $2,000 in it. So this is where his portfolio is at now. He has 25 grand, and that's down 16 grand since he started investing, okay? He has 7,800 in Boohoo, okay? And it's down 70%. Like, he has 1,000 in LSE, London Stock Exchange, grand 200 in MasterCard. it's just such an odd, like, amalgamation of stocks. But yeah, he's just done really shit. And to be honest, this is probably easy pickings, me just coming over and saying, look how shit your portfolio is done. But I just find it bonkers how this guy spends so long making videos. You know, he does loads of videos talking about investing, talking about the economic climate, yet he's so tone deaf when it comes to his own investing. Like, I can't understand why he has that much money in Games Workshop. Like, Games Workshop is a niche company in itself. Like, the sector itself is niche and specialist. Like, you shouldn't have that much money in a specialist sector as in proportion to your whole portfolio. That just doesn't make sense to me. That just seems like a massive no-go. And fair enough, he's up 31%, but that just seems backwards to me. It really does.
Again, I'm very mindful that my exposure to Games Workshop here is very much on the high end, and this reflects a similar mistake that I made in Boohoo, except with Boohoo I was very much buying a falling share, which then took up a way too large exposure in my portfolio. That said, Boohoo's been a bit weak as of, well, the last 2.5 years, and at the moment, despite Boohoo shares stagnating and dropping down at the end of the week on Friday, it appears that Games Workshop has dragged the portfolio up. At the moment, I'm actually paying close attention to the likes of Alphabet, because it's vital that I diversify and really get a good position. That said,
Bro's changed his mind. It's vital that I diversify. But then that's the thing, if you make a video saying I hate diversification, as a finance YouTuber, there is an element of prestige. People are going to be looking at your content going, oh, this is a financial YouTuber. His advice must be real and good, but it's not. It's just shit advice. I don't know. This guy just confuses me like so much. And here's the thing, right? He talks negatively on Boohoo, like he's clearly negative about it. Still holds the stock. Like, I don't get it. If you think a company sucks and you're negative about it, just sell the company. Like, it's not going to go up. Like, if you think it's a bad company, you think it's going to keep going down and you don't think it has the potential it did before, don't hold it just because it's on a dip. Because, it has to go back up, because it's just not how it works. I'll tell you right now, Boohoo's probably a good buy because it's just so damn cheap. But, I don't know.
if we look at the max history of my portfolio, I'm nearly reaching all-time highs, albeit this is very much misconstrued because I've made deposits of a lot since the last time I reached this amount in the past. And don't forget that I'm down by this whopping...
I think I realised why he likes free trade, because it doesn't show you how much money you've actually invested. It just shows you how much money you have at that point in time. Like, I'll show you trading 212. Like, on 3 months, you can see, like, the dot is how much I have invested, and then the blue line's how much it's worth. But anyway, guys, I'm going to end this video here. Hopefully, you guys did enjoy it. I know this was like a ranty video, and hopefully it turned out well, but it's something I found funny to do, and I guess that's all that matters. Thank you for watching this video. If you enjoyed it, smash a like button, subscribe to the channel if you're new today, and I'll be seeing you guys later. Take care.